Joining us now from London is David Powell, Bloomberg Intelligence chief Euro-area economist, who also has a new report on his economic outlook for the region. It's a big report that BI put together, looking through inflation and what it means for the ECB. What was your biggest takeaway on inflation? Is it a slow grind lower, or is this a blip?
Right. Well, the latest number we've seen, the reading for May, is really just a blip that was caused by transitory effects such as fuel prices and airfares. Underlying inflation was probably unchanged in May. And looking ahead, which is what we try to do in that report, over the next quarter and several quarters, actually, over the next 2 years, that underlying inflation, even though it's very weak now, is likely to accelerate slowly.
At the same time, though, you wind up having unemployment continuing to come down, 9.3%, the lowest since 2009. Just look at Spain, just look at Germany. That unemployment rate continues to fall. What bind does that wind up placing the ECB in then?
Right. Well, the decline in unemployment is a reflection of the rapid speed of growth we're seeing right now, which is strong, and the ECB is happy with that. And that will probably allow the ECB to soon talk about tapering. But the real problem that the ECB is facing is a disconnect between the rapid pace of growth and the rate of inflation. That growth is not translating into faster inflation at this stage, even though that decline in unemployment, as you've just pointed out, would normally lead to higher wage growth and therefore to higher inflation, but that's not happening.
Well, David, normally is the important word, it seems to me, in that sentence. When you look at what Mario Draghi had to say on Monday, he really sent a message, I think, to the markets. We really aren't so sure about this growth. We need to continue really to support these markets. Are economists really becoming concerned that maybe the models are out of date? Something else is going on they don't fully understand?
Yeah, I mean, the link between growth and recovery, which is symbolized by that decline in that inflation, that decline in unemployment, it's not leading to higher wage growth, which we would normally expect. In particular, if you look at a country like Germany, Germany's been at full employment for a long time, and the rate of unemployment is below what we call the non-accelerating inflation rate of unemployment, meaning that inflation should be getting seeing a bit of signs of life there, but it's not. There is a disconnect even in the healthiest economy of the euro area at this stage.
Megan,